Are you a practitioner helping families plan for their futures? Do you specialise in trusts, inheritance and estate planning? If so, join STEP, the leading global network of trust and estate professionals. Whether you're an expert or just starting out, we're here for every stage of your career. Trial the STEP Journal for free at www.step.org/today and see what membership can offer you.
You're listening to the Today's Wills and Probate podcast, one of the leading sources of information for the wills and probate sector. Don't forget to subscribe and sign up to our free newsletter at todayswillsandprobate.co.uk and follow us on LinkedIn and Twitter.
Hello, welcome along to the latest Today's Wills and Probate podcast. Today, I welcome on the podcast Dan Baines, founder and CEO of Advanced Inheritance. Advanced Inheritance, Dan will probably explain an awful lot better than me, but provides funding for beneficiaries when it comes to probate. The topic of conversation is looking at this market. It's a relatively new market, probably been around now for 4 or 5 years. There's been some comings and goings in it as well, which we'll no doubt touch on. And just kind of really interested to understand why you think the opportunity is now for Advanced Inheritance to join this space as well, Dan. So thanks very much indeed for joining the podcast.
Thanks for having me, David.
First things first, tell us a little bit about yourself. Who are you and what do you do?
Yeah, Dan Baines, Chief Exec of Advanced Inheritance, which is the business that I can now call them friends, I think, long-term colleagues, and I launched late last year, FCA regulated business, which specializes in, well, our goal is to improve the lives of beneficiaries and executors. And we do that currently by providing them money at the point when they need it during probate. So that's what we're here to do. Obviously, a young business, very interested in the space. I don't know if you want the origin story.
By all means, it's always worthwhile sort of understanding a bit of the background as to how you got here.
Yeah. Obviously, I didn't wake up sort of bed one day and think I need to get into the probate market. But this is, I guess, there's sort of two strokes of luck in life that have got me here, and I think our team here. First was going back a long time, and I won't do the full life story, but my first real job, going back to the early 2000s, was just sort of come back from traveling and took the first job that anyone would give me, to be honest, which happened to be in a laser eye business, which was quite cutting edge in those days. Pioneering business, obviously quite interesting from a technology point of view, very much a tech first business, very strong. Not only do you need good technology in terms of good lasers, but we also had very good systems for the time. But most importantly for me at that point was I completely lucked out in terms of the team that I found myself working with in those days. And it was a really good bunch of people, very forward thinking and progressive, and very different to me in terms of skill set, but very much culturally aligned in terms of wanting to do a good job for customers and quite entrepreneurial, I suppose. And actually 5 of us, from those 20 years ago, that business are involved in Advanced Inheritance now. We then moved on and began building a business called Age Partnership, which started out as an equity release broker, but eventually became the number 1 retirement finance business in the UK. And that was all quite remarkably similar to laser eye. I mean, it sounds a bit odd to make that comparison, but if you think about it, I guess it's a product that done well can be life-changing, done badly can be probably life-changing for all the wrong reasons. When you're firing a laser at somebody's eye, you certainly don't want to be getting that wrong. And when you're, talking about taking cash out of a property, which is in most people's cases their biggest asset, you've got to make sure you do that right too. So there were a lot of similarities, and that was a good journey. We grew that market, the equity release market specifically, from about 600 million of lending a year in the late 2000s to about 6 billion by 2020. And then the team sort of left that business over a period of a year or two. And I had a year out, did not much, sort of spent a bit more time with the family, and then found this opportunity to work with the founding team of a business that your listeners might have heard of called Tower Street Finance, who were pioneers of probate lending. And to be honest, it took me a while to explain what the product was to me. And once I got it, I thought, this is interesting. I like the sound of this. I can really see how this is going to benefit people. There was a time in my life when I think it would have benefited me had I known about it. And the feedback we got from customers in that business was just outstanding. It was really positive. And I felt like, it was a good business trying to do it right. But for one reason or another, unfortunately, it had to close. I think it ran into some financial difficulties and wasn't able to carry on helping customers. So that left me kind of, I suppose, without a future in that business, but, with a bit of time on my hands. So I thought about it for about 5 minutes, rang my old team and to see whether they would be interested. And yeah, they saw what I did in probate lending, that, this is potentially a force for good. It can be a great product when done well, completely either misunderstood or not understood generally by the market. And therefore, this perhaps suits our skill set. This is something we can have a go at. So we agreed to start the business. Subsequently, very fortunately, been joined by a couple of the key members of the Tower Street team. So Jim and Amber are working with us now. And yeah, we're just delighted to be in this space. We've been going about a few months now, and it's just been very, very positive. The customer feedback's been incredibly positive, and we feel like we're changing lives, which is what we wanted to do.
Really interesting backstory. Thank you for sharing. And I guess one of the things I've taken away from what you've said there is just the level of detail that goes into this lending as well. One of the things we're going to come on to in the course of the discussion is some of the criticism of lending of this type, and I guess probably later life lending as well, because of all the care that needs to go around that. But just for listeners who haven't particularly come across this sort of funding, inheritance funding, talk us through what it is, what the practicalities of it is as well, please.
Sure. So probate lending takes two main forms. So there's an inheritance advance, which is for beneficiaries who want to take a proportion of an inheritance that they are due, but sooner than they would otherwise receive it. And that can be at any time after death and pre or post grant of probate. And fundamentally, this is a question for them as to do you want or need some of this money earlier? And the trade-off there is that the provider, Advanced Inheritance in this case, would charge interest on that loan. Then there is the estate advance, which is a loan for executors and personal representatives that they can take out that is secured against the estate rather than themselves personally. So it allows them that sort of safeguard of not having to be personally liable for the repayment. So all of those, or both of those products, certainly when we decided to come into this space, wanted to make sure that they were wrapped up in safeguards. I know you touched on criticisms and consumer protections. And we thought, well, there's two aspects to that. One, which perhaps we'll talk about in a bit, which is kind of how you go about distributing a product like this safely. But the other is just how you make sure that the product has safeguards baked into it to limit the risk of harm. So in the case of both of these, as I said, there's no personal liability on the part of the borrower because the loans will be repaid directly from the estate. There are no regular repayments required. Obviously, missing regular repayments is one of the most common reasons for a default on a conventional loan. That isn't a risk. It's impossible to fall into arrears with one of these products. It also means the credit score of the borrower is generally not something that is a barrier to being able to access this kind of finance. There's a no negative inheritance guarantee, if you like, a bit of a mouthful, but effectively the security is provided by the inheritance only. So in the case of inheritance advance, can never owe more than the amount that they're inheriting. I mean, we also have a 30-month cap on interest. So if the estate was to run for an unexpectedly protracted period before distribution, perhaps property sale falls through 2 or 3 times, or there are other complications, we freeze interest after month 30. What we don't want is for a customer to spend their entire inheritance on our interest. The loan is technically open-ended, which again is another safeguard. So if things take longer, the borrower doesn't have a lender breathing down their neck saying, when are we going to get repaid? And of course, we're regulated by the FCA and loans comply with the Consumer Credit Act. And just one point on FCA regulation, and which I think is important for those who've worked in an FCA regulated environment, is that the consumer duty, which came in as an FCA, I guess the FCA's latest iteration of how they believe consumers should be protected, is a real thing. And it has a big impact on how lending companies, and frankly all those operating under FCA regulation, should be approaching customers. And that goes way beyond just having products that have good safeguards. This is also about making sure that you support customers in all aspects of their financial needs and protect them. And it isn't good enough these days just to say, here's my product, take it if you want it, and good luck to you. We wrap that also, as we perhaps will come on to, in a process that certainly assumes no knowledge on the customer at the point when they first engage with us, and has a lot of support around how they might manage their finances sensibly, so that they don't, for example, overborrow or take money in a way that is not necessary.
I'm sure there will be plenty of listeners who have every empathy with regulation and solicitors regulation authority requirements and FCA requirements. They are pretty onerous, and kind of leads on to what you've talked about there and alluded to in terms of protections and safeguards, because it's really important that listeners understand that this is a pretty well regulated part of the sector. There are lots of safeguards there, because there is criticism that funding like this and later life lending in general potentially preys on people, and in this particular scenario preys on people that are grieving and vulnerable. I guess you've got a pretty robust response to that.
Vacancy Legal Recruitment, a refreshingly unique and personal talent agency developed specifically for legal. Dedicated to the sector and with extensive experience working across legal services and legal technology, we bridge the gap between your requirements and top-tier legal talent. Get in touch today and say hello at vacancy.co.uk.
Well, I think if you're not asking that question, you're not doing your job. I think you're absolutely right to, and it's a conversation I think we need to be having. I mean, all of our customers are potentially vulnerable in two particular ways. One is, of course, that they are recently bereaved in the main, and the other is that they need money. And both of those things potentially can lead to vulnerability. So we have an enormous responsibility when dealing with these people. And to be honest, there's a lot more besides. And I mean, I know you make the point around regulation, and I do believe, having worked in FCA regulated environments since 2007, now I think the FCA, whilst it's sort of, that's a whole nother question actually, but somewhat under-resourced, I would say. But I think in terms of the principles that their expectations of regulated firms, I do think now they are perhaps more appropriate. But, make no mistake, I suppose the financial services businesses are still paying the price for things that happened some years ago. And, I still remember in 2003 going into my local high street bank for a loan to put a deposit on my first rental flat. And there's like 150 quid of payment protection insurance. Back then I was vulnerable in that I had very little, financial life skill, I guess. I was a young person trying to get a flat. And I got sold PPI and had no idea what it was I was buying, and certainly wasn't explained to me. And I think that probably illustrates a point that I would make around a lot of financial services products. It's very rare that you will find, there are some products that are just not suited to anyone, frankly. But in the main, I think what you'll find is that the product itself is not the problem. The problem is how that product is sold and distributed. And again, I think that's where we really need to make sure that as a business and as a sector, we look out for people in a way that goes beyond the kind of statutory requirements. So I've talked about grievance, obviously, people who are in need of money. Both of those can cause people to act in ways they wouldn't otherwise act. We're also seeing, and I'm sure that solicitors who read your publications and listen to the podcast will see this, but kind of family disagreements that lie dormant for years, and because people frankly can maybe meet every year for Christmas and for a few hours and put up with each other and everything goes just fine. When somebody dies, these things really can, when you're having to decide what mum would have wanted and things like that, these things can really come to a head, and it puts a lot of pressure on people at a time when they're already struggling. So I think, that's something we have to be absolutely aware of. I mentioned earlier, we assume no knowledge on the part of a person who enters our process, if you like. So we start by within seconds giving full transparency around the product's costs, how it works, how it's repaid. The long and short of it, particularly in inheritance advance, but any probate loan really, is the reason to do it is you need the money. The reason not to do it is you don't think the costs justify your need for money. So as long as we're completely transparent about that cost and the customer understands it, in the case of our process, we ask all customers before they can take the money to explain to us. It sounds a bit overbearing, but this is for their safety as much as ours. We ask them to tell us how much their loan would have become after 12 months before we allow them to take the money, because the worst thing we could do would be to arrange a product for someone who just doesn't understand it thoroughly. And again, those safeguards we have in place around protecting them from taking out a product like ours when they shouldn't. And we know that our loans are not for everybody. They're certainly for more people than are currently using them, but they're not for everybody. And then there's also what other supports should we be providing? So all of our people are trained up with, we all go through training with the National Bereavement Service, for example, to ensure that we've got the skills required, or some of the skills required, to adapt based on somebody's circumstances and how they might be grieving. But we also have lots of signposting services for things like debt management, things like the Samaritans, and we do try and, again, the simple way of looking at it is, if you get to the point where you can make perhaps I shouldn't say this on a podcast, the bad things about our product, which are the fact they cost money, very, very transparent, get them out on the table early and say, this is the cost. You can then decide whether the benefits outweigh those costs in your own time and without any pressure. Then it makes it simple for us as a business, because all we then need to do is make sure customers are given the support to make a good choice, whether that's taking a loan out or not, or maybe it's just going and seeking some support for whatever they're going through. Or, the one area we haven't found great support in, which again I might come on to if you wanted to go down that route, is people who are not used to having money and all of a sudden do, which is a kind of an odd cohort. But given the state of the nation and the way that inheritances are now playing such a huge role in the financial makeup of lifetime income for those who are lucky enough to receive an inheritance, then I do think that's an underserved part of the market. So we help in that way as well. We provide people with guidance around budgeting and things like that.
There are two kind of key blockers, I suppose, to progress here. One is awareness of your product amongst firms, amongst solicitors and amongst will writers, for example. And that's something that doing things like this podcast will help with. But equally, there are there's probably a lack of awareness amongst consumers as well around the products. What are you doing to plug both of those gaps at the moment, and that education piece that you've kind of talked about there?
Yeah, we're trying to bang the drum for this product area. Aside from just doing this responsibly, and that's not to say that others are not, I've no reason to think they're not. I think hopefully this is going to be a diligent and well-run sector for the foreseeable future. But it starts with that, right? It starts with doing this right, so that people talk positively about their experience with the product. Again, we've been through this with other product areas as a team, and getting good outcomes is critical for long-term success. Beyond that, we want to raise awareness in whatever way we can. So in the consumer space, obviously, we're doing some conventional advertising. We try and provide guidance around probate, but so an area we haven't really focused on as heavily as I think we probably will in the future is how we engage with professionals in the space, perhaps your listeners, on how we can help them to deliver a better service for execs and beneficiaries. Because I agree with you. I think awareness of these products is fairly low. The solicitors that I've spoken to who deal in this space specifically, I would say their awareness is really mixed. Some really understand it and get it. Some, quite often, they misunderstand it. There's also, the elephant in the room around liability. So, what risk am I exposing myself to if I'm a solicitor? If I say to my customer, you should consider an inheritance. Let's say you've got somebody who, and we see this, right? We issue loans for anything from, business expansions, renovating Michelin-star restaurants, to literally taking people out of food poverty. People who, I spoke to a customer who was very, very urgently needed the money. And, he was using food banks, and his local food bank had been closed for a couple of days. There are people who are really struggling. This guy was going to inherit a significant amount of money. Again, this was a good case study for, not just us being able to provide short-term finance when he needed it, but also help with budgeting. Because, this isn't somebody who I suppose had a great deal of experience of having money and knowing how to make it last. And I think, these customers will, all right, they're maybe not the customer, because they may just be a beneficiary of the estate. And I think often the administrator will view the beneficiary as somebody perhaps they want to engage with quite late in the process, because they can create some inefficiency, perhaps if they're impatiently asking for their money. But I just like to think that by being aware that these solutions exist, an inheritance advance is something that they could consider. I'm not asking a solicitor to say that somebody should or shouldn't do this. I actually think they should not do that. I think they should find businesses that specialize, that they feel comfortable referring to, or maybe just say these things exist if you have a pressing need. But this guy that we're talking to here, who's now, very happy, his life is immeasurably better as a result of having found us. But he didn't find us because the solicitor signposted us. He found us because he stumbled across an advert. And again, I think, from a solicitor's point of view, we were doing a bit of work on the analysis around the legal ombudsman complaints, and a quarter of complaints relating to probate administrators, unsurprisingly, relate to the length of time it takes for inheritances to be paid. So again, back to that point, just let customers know there's an option. Let customers know that if they wish to spend some of their inheritance on interest in a very transparent way, then go and investigate this option. If you can afford to wait and you don't need the money now, don't do it. But if this is something that you feel that you need, then the choice is there for you. And I think that's important. So I'd like to think that over time we can get that message out to solicitors.
I find the line you draw between the fact that people who may be on very low incomes, or who perhaps haven't got any experience of inheriting sizable sums of money, and the role and responsibility of you as a business in signposting them as to what they might do with that, or how they might protect some of that. I mean, where's the line on the role as you as a business, or the role of the solicitor in providing that kind of guidance and advice, I suppose, because we're sort of shifting responsibility a little bit if we're not too careful. And there'll be lots listening who are sat there going, well, there's absolutely no way I want any role or responsibility in how that money should be spent, or any guidance that we might give to somebody on that front.
Yeah, I think it's a perfectly fair question, and I think there'll be plenty of people who will remain of that view, and I respect that. But look, we're just trying to do the right thing. We want to, if somebody inquires with our business, we want to treat them like we would treat a friend or family member. And sometimes that's difficult. Obviously, we're not a financial advice business. We're a consumer credit business. What we can't do is say, you should be doing this, you shouldn't be doing that. What we can do is state facts. We can tell people that if they're going to have 100,000 inheritance and they're going to spend it at £10,000 a month, it's going to last 10 months. We can point these things out to people in a way that I think, it would be very easy to I guess, listen to me say that, and maybe rightly so, and say, whoa, that's overreach, right? You shouldn't be telling people that they shouldn't blow their inheritance. But that probably is what I'd say to my mate if I saw him blow. I wouldn't say don't do it. I'd just say, have you considered that this is what you're doing? And are you happy with that? So we're not the fun police, and we're not here to, there are certain things you can't do with our loans, right? So I guess that helps. As part of our process, we have to ask people what they're using the money for, or should I say we choose to, because we want to make sure that they're not using the funds for something that, maybe there's a grant available, or maybe it's something you shouldn't be borrowing money to do, gamble or invest in crypto or something. So there are certain things that we say our money is not suited for. But beyond that, we don't mind. If someone wants to go on, a lavish holiday, that's up to them. We do think it's our job just to make them understand that doing that's just going to cost them a bit of money in interest, and that they therefore can make an informed choice. And that's really what this is about. As I say, I do understand why people run a mile from that conversation, particularly where liability is concerned. And hang on a minute, what happens if, I don't know, they go on the holiday, and did I tell them to go on the holiday, and all of a sudden they've run out of money in a year's time, I mayn't bother. So it is nuanced, and you have to be cautious in how you approach information, and you have to be fact-based. It's helpful that there is guidance out there from the government, from the CAB, from other sort of independent voices that are there to help. So we signpost that quite a lot. But yeah, I mean, I guess there's probably no perfect answer to this. There will always be people who, spend their money very quickly and regret it. Maybe there'll be people who spend the money very quickly and don't regret it and think, great, I loved it, I lived it, and so be it. So again, we're not here to tell them which it should be. We're just here to help them understand the choices that they're making.
There's that wonderfully famous quote attributed to George Best, isn't there? Made a lot of money playing football and spent it on booze, women and fags, and squandered the rest, or something like that, wasn't it?
Where did it all go wrong? He said at the hotel door. Yeah.
We're fast moving towards the end of the time we have for the discussion, Dan. And I guess really I was looking to end the discussion, end the podcast on your take on the health of the market, what your appetite is for future lending. You've explained that as it stands at the moment, you have these products that are predominantly focused on probate. Do you see that there are other opportunities in and around this market? Perhaps you won't tell me because others might listen to this and take advantage, but yeah, what's the future of this market look like for you?
Yeah, so okay, I guess there's two questions in there. I mean, one is what's the future of this market, and the second is, I guess, where we see our future. I mean, I view this as a nascent market, very much immature. It has good fundamentals. It clearly there's a big audience that potentially could benefit from these products. Very low awareness, also quite high level of misunderstanding around the product. So that's pretty much what we saw in the equity release market in 2007, 2008. So if we followed a similar trajectory, then I would expect volumes to grow. I think from the point of view of the market and how it serves customers, I think we can, over the sort of medium term, I'd like to think we'll see prices come down to the consumer. In a nascent market like this, there are two kind of major challenges that impact customers, because whatever anyone tells you, ultimately costs incurred by service providers to some extent find their way to the customer. One is that in a young, sort of relatively unproven market, and I mean, actually maybe Tower Street as a pioneer in the market coming in and then going out sort of helped in that they created a market and proved demand, but the fact that the business didn't then continue to operate, maybe does that put some people off? But the cost of funding is relatively high in a small market that is as yet unproven, so that's passed on to the customer. And the other thing is that raising awareness of a new product is a relatively expensive endeavor. So advertising is more expensive. You have to spend money creating that knowledge awareness. Fortunately, we've got great podcasts like yours that are willing to talk about these products, but most of the time you're having to pay to get a message out there. So that is passed on to the customer. So as the market matures, my expectation is that the cost to the customer will gradually fall. I mean, that said, I would say this, wouldn't I? But customer feedback suggests that customers feel like these products are extremely well priced compared to other things like personal loans, credit cards. And when you consider those sort of features, no requirement to make repayments, open-ended, no personal liability, I think when you put that in the mixer, the general view amongst customers is this is really already representing good value. But nevertheless, I think that will improve over time. In terms of what we do, to be honest, David, it'll just be driven by our customers. When in the last business we were involved in, we started out as an equity release broker. And at no point, did we sit there with a 5-year plan that said, then we do pensions, then we set up a lending company, and then we do lasting power of attorneys. We just were speaking to customers who it became apparent that using, let's say, your pension commencement lump sum when you come to retire would be an alternative to equity release. And it didn't feel right that we could talk about one without the other. So we built a pension business. We became the biggest annuity broker in the country. because it became apparent that those people who were using a pension commencement lump sum also wanted to take an annuity income. So to some extent, I know this sounds a bit woolly, but we'll do to some extent what our customers ask us to do. Provided we think there's a reasonable business case behind it, then we'll generally try and follow the demand in the market. We've only been going, a year or so, so I don't feel like we're in a place where we should be distracting ourselves too much from doing what we believe is right here, which is probate lending and doing it well. And that's what, I suppose for the next year or so, I expect that to form the majority of our focus, if not all of it.
I want to finish with an analogy that you used, and it's a little pointed, if people won't mind the pun, which is you compared what you do with a kitchen knife. And you said that in and of itself, lending money or a product or service like the one that you provide is not inherently bad. It's the way that it's used that might be perceived to be good or bad. And the same with a kitchen knife. In and of itself, a kitchen knife is fine, but the way in which it's used can be good and bad. And I thought that was a really interesting way to describe what you do and to perhaps tackle some of the commentary that is around this space. But it's been great to have you on the podcast, Dan, and I really, really appreciate you joining and sharing your time. Thanks so much for being part of the podcast.
Thanks for having me.
The Today's Wills and Probate podcast is available on your preferred podcast provider. It's also available on todayswillsandprobate.co.uk. My thanks to Dan. Thank you as ever for listening, and we'll see you again soon.